Hello, everybody. Happy Monday. I hope everybody had a fantastic weekend. Please let me know if we are coming through loud and clear. Hey there, Rodney. And guess what? I discussed Mara with Howard earlier this morning before the market opened. I was waiting for a little bit lower level, but yeah, Howard and I were in touch this morning, but for sure, a shout out to him. Hopefully, you all had a fantastic weekend. I did, except for the ending yesterday of maybe that Bears game, which obviously didn't work out too well. However, you know how, and in fact, those of you that read this week's week ahead, I put in there about the Halloween effect. I referenced the Super Bowl indicator. You know, there's all sorts of funky indicators out there. Well, one that I just learned of literally over about the last 20 minutes, and again, take it, as you will, but there was a big change because of the end of the Bears game yesterday, and not just because the Commanders were a 1.5 point favorite, and it swung on that Hail Mary that boy just stuck a dagger in my heart. But another one of those stats, just like the Super Bowl indicator, the Dow, anything you want to pull out there, I just wanted to throw this one out to everybody. So since the team moved to Washington, D.C., which was back in 1937, there have been 21 presidential campaigns. Okay? The outcome of their final home game before the election, okay, has been a pretty good predictor of the outcome of the election. 17 of 21 times when the Washington football team, regardless of what they were called, won that last game before the election, the incumbent won. Just another one of those crazy stats, crazy sort of things that that you see out there. Again, we'll hear lots about the Super Bowl indicator and all sorts of things, but just wanted to throw that one out here. Today, what is going on today? Well, you know what? The market has been up all day. It's not up as much right now as we were earlier, but it started with overnight session. And it seemed like, at least from what I saw, the buyers were coming in because the market was very relieved that in the Middle East, and yes, this is bringing in geopolitics right now, but the market was pricing in some risk that if Israel hit Iran's oil sector or did something to disrupt energy, the market was pricing that in. And since they didn't, there seems to be a big relief there. That's actually the big drawdown that we're seeing in crude. Crude was down about 6% earlier. It's not quite as much right now. I'm actually looking for some cheap crude plays. Bunch of stocks have earnings this week. Chevron, Exxon, bunch of those. There's a few more I'm missing. Valero. There's a few more I'm missing, but Occidental Petroleum. Okay, Occidental Petroleum is the one I have my eye on. And it's been really hovering here all day. Hasn't moved much. And you can see that this area that we are trading at right here, that has been recent support. So pretty much gonna, kind of follow this through the day here. And if nothing else changes, we may put out some sort of entry into Occidental Petroleum. All right, guys, let's dive into today's topic. Okay, we know about the Greeks. We talk about the Greeks all the time. Delta, gamma, vega, theta, and then we've got rho for interest rates. Okay, I think everybody knows, at least on the surface pretty good handle of what delta is, right? Delta is the amount the value of an option changes as a stock moves $1. Okay? I think everybody pretty much knows that. But what is gamma? What is gamma? Gamma is known as the second derivative of delta. So let's put this up here, and anybody that wants to get a hold of this presentation that I'm putting up here, we'll put up a link for that, okay? But gamma measures the change in an option's delta when the stock changes by $1. Okay? And if you think of it, before I go any further, if you think of it, we all know that when we get to expiration, every option has to be what delta? Okay? Regardless, every option has to be what delta when we get to expiration. Okay, it's one of two things. Anybody put it up here in the chat, please. There we go. 0 is 1. Or what's the other one? Gilbert? Okay, Guillermo, 0. There we go, Robert, Derek. 0 or 100, okay? But we know during the lifespan of an option, okay, it's not 0 or 100, it's somewhere in the middle. So how do we get from that 30 or 50 or 80 or 90, whatever that delta is, how does that gravitate to 0 or 100? How does that delta change? That is gamma. Okay? So again, as delta is the speed at which an option's price changes, gamma represents how quickly that happens. Okay? Long options, that means options that you own, have positive gamma. Short options, ones that we have sold, have negative gamma. Okay, and it is the same for calls and puts. Just like when we talk about Vega, when we know that Vega is the same for a call or a put with the same expiration, same strike, same holds for gamma. Okay, if you're long the option, whether it's call or put, you're long gamma. If you're short the option, whether it's call or put, you're short gamma. Okay, now some of the properties of gamma. Okay, and I'm going to show you a chart here in a moment. Some of the properties for gamma. Gamma is highest for at the money options. Okay, and moves lower the further and further an option goes in or out of the money. Let's take an example here. Let's look at, I'm going to pick a random stock here. We just put on a position in ANF. Let's look at ANF. Okay. Here is the gamma. Okay. Let's look. The stock right now in ANF is right about 140. Okay. So let's look at the gamma, which I have added now in this column right here. Okay, and you will see, where is this the highest? Right at the money. And either the further out of the money, or the deeper in the money we go, or the further out of the money we go, gamma decreases, decreases, decreases. Meaning the change in the delta of an option, the further away you are from at the money, the further you are away from the strike, decreases. Okay, does that make sense? Does that make sense to everybody? So there's less of a change in delta. There's also less of a change in the value of an option, and less of a change in gamma, the rate of change in delta, the further away from the strike you are. Okay, now great. Now, gamma is also highest for the closest expirations. So if we go in here and we do, okay, I've got just a few expirations showing here. If we compare the exact same strike at each expiration, okay, we can see that gamma decreases the further you go out in time. Now think about this. Okay, think about this. We know, anybody else having a problem? Gene, I think it's on your end. I don't think anybody else is having a problem. Can anybody else let me know if I froze here? I haven't played freeze tag in a long time, so I know I'm moving around. Are we good? Okay, we're good. Okay, good. So think about this. As we mentioned at the top here, we know that at expiration, every option has to be 0 or 100 delta. Okay, so if we are at the money the morning of an expiration, that delta is going to be 50. But by the end of the day, it has to be 0 or 100. That doesn't hold for options further out in time. So the more time to expiration, the lower the gamma. The closer to expiration, the higher the gamma. Okay, so let me put this back up here for everybody. That's on this slide right here. And again, we'll post up a link here, okay, to what, or to this presentation where you'll all be able to get that. Now, the word of the day, the word of the day. Yes, you could probably all have guessed that. Gamma. All right, that's our spinning wheel word of the day. Okay, back to teaching here. This is what a gamma curve looks like. Okay, with at the money's here in the middle, just as we discussed. So you've got your at the money options here with the highest amount of gamma. And then the further out or further in the money you go, the lower the gamma gets. Thank you, Bobby. Okay, also, gamma plays a big factor, a big role in how we trade. A lot of times we don't even think about it. Okay, we don't even think about it. But when volatility is really cheap, okay, when volatility is really cheap, we see this kind of curve up here, okay, where that gamma that we just talked about, the further and further away from the money we go, gets towards zero quicker. The more volatility, the higher the implied volatility is in the marketplace, that gamma curve flattens out. So when we get to a point where if we want to make a trade ahead of earnings or something like that, where volatility is really expensive, we're going to see that curve really flattened out so that some of those out of the money options still have some gamma to them. Okay, but the more that volatility comes in and gets back to normal and cheaper, the more we get towards the normal gamma curve here. Now, why is this all relevant, right? There's always lots of things we can talk about, lots of things we can explain, but why is this all relevant and how do we put that to use? Okay, well, check this out right now. Positive gamma positions, okay, we want a big price move. If we have positive gamma, we want a big move. If we have negative gamma, we want a very, very small amount of movement. Okay, and then as I just showed you and as we just discussed, these are the principles of gamma. Now, let's actually look into some examples of these two things here. Okay, when we talk about where we want a position to go, guys, regardless of the type of position, where do we always want a position to go? Oh, Robert, I like that. Nice. Get that gamma symbol in there. Love that. Can always count on you. Yes, we want it to go to the short strike. Okay, well, here's an example. Here's an example. If we own gamma, okay, which means that we have bought options. Typically, we're going to be long premium. Okay, we are going to be long premium. Okay, we would have a curve. Your position graph would look like this. This is known as a smile or a back spread. Okay, this is when we own options, when we are long gamma. Well, if we're long gamma, we want the stock to move as far away from our long options. Our long options are right here. We don't have any short options in this position. So we want the stock to move as much as possible. This is known as a back spread when you are long gamma. Now, the opposite of that, when volatility gets really, really high and we want to sell it, right, because the premium levels are high, if we were to sell gamma, we would have the opposite effect. We would have what is known as a vertical curve or a front spread. Okay, now in this scenario right here of being short gamma, we're short these options right at the money here. Where do you see the highest P&L on this graph? That highest P&L is right here at the options that were short. Okay, the at the money options. So where do we want the stock to go when we are short gamma? We want it to go right to our short strikes, which happen to be right here. Okay, hopefully that makes sense for everybody. Now, what is a gamma squeeze? And in fact, before we go into that, let me put up here an example. Look at this position right here, guys. Here is a position, theoretical, hypothetical position in NVIDIA, okay, where if volatility was really, really low and we wanted to buy that premium, okay, we might buy the at the money straddle. If we buy the at the money straddle, we want to see that stock move. That's what our curve looks like. We make money if that stock moves in either direction. So this is what it looks like if we were to buy a NVIDIA at the money straddle. And what you'll notice is, okay, focus in on this line right here. Okay, these two lines, actually, gamma and delta. Okay, gamma and delta. What happens to the delta of this position as the stock goes down? What happens to the delta of this position as the stock goes down? Remember, delta doesn't stay static, right? It moves. It moves because of gamma. So what do you see happening to the delta as the stock is moving lower away from the at the money straddle? Right, we're getting more and more negative delta. It's going lower. And now look the opposite side of the spectrum. Now look to the upside. The further and further we go away to the upside, what happens to our delta? It increases. We get longer and longer and longer delta. Okay, so that coincides with this position. Well, when the stock is moving down, we want to have more negative delta. And when the stock is moving higher, we want to have more positive delta. Okay, now let's contrast that and look at, I set something up here in IWM. This is a position showing a short at the money straddle, selling both options, not buying, but selling so that we have short gamma. Okay, now watch, we're going to look at the exact same things here. Okay, here is that, what is known as that vertical or front spread curve. But what do you notice here with the delta? As the stock is going lower and lower and lower and lower, what's happening to our delta? It's increasing, but positively. It's not increasing negatively. We're actually getting more positive delta. Well, if we have a position on and the stock is going down, I don't want to get longer and longer. I don't want to have more delta. And then on the other side, if we look same thing, if you have a negative gamma position, as the stock moves higher, we see delta decreasing or getting more negative. Well, same thing. If we have a position and the stock is moving higher and higher and higher, we don't want to keep getting shorter delta, right? That's counterintuitive. So again, bring this all back to where do we want a stock to be at expiration? We want it to be as close to the short strike as possible. Does everybody see that? Does everybody understand that? And if you don't, okay, gamma is one of those Greeks that can be very, very difficult to understand. And most people, when they're first introduced to it, not going to fully understand it the first go around, the second go around. Okay, but I'm trying to give you some examples of how the properties of gamma works and how the chart looks like, and tie it into some of our positions. Now, who has heard of, and we've seen not so much recently, but boy, oh boy, did we see a ton of this a while back. Who's heard of a gamma squeeze? And who knows what a gamma squeeze is? Okay. Who knows what a gamma squeeze is? Not me. No, that's good. That's good. Okay. Think about, and we actually just had one fairly recently, a few months back with NVIDIA, but think back more so a few years ago when we had the Wall Street bets, the Reddit people out there and flooding the market, right, with buying calls and like AMC and GameStop and some of the meme stocks. Do you guys all remember that? Okay, so what happened during that time? Retail traders, all they were doing, they were coming in and buying and buying and buying and buying, call after call after call after call. Well, someone's got to sell those calls, right? Well, pretty much it's the market makers, the professional market makers, selling those calls to the retail traders. So what would the market makers then have to do to cover the delta risk of selling calls? If they weren't buying other calls against it, and remember these calls, they were just so ungodly expensive, you could buy stock as a delta hedge. So let's say I sold 10 40 delta calls. Okay? Let's say I sold 10 40 delta calls. That gives me a position of negative 400 delta. Well, how could I hedge that delta? I could buy 400 shares of stock, and that gets me to 0 delta. So, if the stock just moves a little bit, I am what's known as delta neutral. Does that make sense to everybody? Okay, and as we just posted up in the chat here, this is the last call for those of you that don't know what the word of the day is, it is right there. Make sure you get your entry in for today. Okay, today's word of the day is gamma. Okay, so back to our example here. I sell 10. Well, Mr. Fraser Leon, you have to put in a certain word into the chat to get entered in. And that's the word of the day. Okay? All right. So back to our example. If I sell 10, there you go. Thank you. If I sell 10 40 delta calls, I have 400 short deltas, which I can hedge by buying 400 shares of stock. Now, what happens if the stock moves higher and higher and higher and higher? What's going to happen to the delta of those call options that I sold? As a stock moves higher, what happens to the delta of call options? Well, Rodney, my position will get more negative, but what happens to the delta of those call options? Yes, the delta of those call options increase. So now, as the stock is moving higher and higher and higher, okay, I'm still short those 10 options, but now maybe they've gone to a 65 delta. Okay? So what happens is, as the stock is moving higher, I now have negative 650 deltas worth of short calls, but I've only bought that 400 shares of stock. So if I want to remain delta neutral, that means I have to buy stock as the stock is going up. I don't want to do that. And if those calls go to 80 delta, 100 delta, now I'm even shorter delta, and I have to buy even more stock. So you can see this vicious circle here as these stocks would move incredulously higher, AMC, GME, and again, even with NVIDIA, it happened earlier in the year. These market makers, these hedge funds that were selling all of these calls, and sure, maybe they bought some stock, initially to hedge, but now the further and further the stock is rallying, the more negative delta, the more risk they have on their position, they have to buy stock on the way up. That's the short squeeze. That's the gamma squeeze, where that gamma is forcing the market makers or people to buy into the stock rally. Does that make sense? And I guess the wheel is officially closed for the day. Okay, now real quickly, and yes, please smash that like button. Please, please, please. Now, let's look at the opposite side of this. Okay, what happens if the stock goes down? Okay, I've sold 10 40 delta options for my negative 400 deltas of options, and I bought 400 shares of stock. Okay, now what happens if the stock starts going down and the stock starts, cratering? What happens if that delta now goes to 15? Okay, well, if it goes to 15, now I only have short or negative 150 deltas of options, but I still have my 400 shares of long stock. So now as the stock is going lower and lower and lower, I'm actually increasing my deltas. If the stock's moving lower, I want my deltas to decrease, not increase. So now that forces me, not really, Herbert, now that forces me to sell stock on the way down. Forces me to sell stock. That's not what I want to be doing. So when you have a negative gamma position on, if you are going to manage the position to be delta neutral, again, you don't want to have to trade stock that's far away from where the at the monies are, because I don't want to have to be selling stock on the way down and buying it on the way up. Does that make sense to everybody? So that was the gamma squeeze, is that all of these market makers, hedge funds, whomever it was, that was selling calls, even if they were buying stock, well, as the stock would move higher and higher and higher and higher, the delta of those calls increase. It would give the position a much shorter delta. They would have to buy stock to cover those deltas, kind of the self-fulfilling prophecy. All right, guys, I know a half an hour is not a lot of time to review the gamma squeeze, but this is a really good overview, and this is something that does happen. We just posted up in the chat there if you want a copy of this presentation with all of the info about gamma and gamma squeeze and all that. Okay, then there is a link in the chat right here. Firms have to remain delta neutral. Well, it all depends on their risk tolerance, Barry. I know when I was a trader, especially on the floor, building up, massive positions, I wanted to stay as delta neutral as possible. The reason being is I didn't necessarily want to make my money. I mean, I'd like to. I didn't want to have the risk of stock movement. I wanted to trade off the volatility, off of buying things cheaply and selling them expensively. And Bobby, yes, a gamma squeeze is like a short squeeze. Absolutely. Okay, couple things before we go to the wheel. Okay, you can sign up for my weekly watch list there. I am actually doing a live webinar today at 3:30 Central Time. The link is there. If you would like to tune in and listen and see what we have going on there, that would be great. I'd love to see you all this afternoon. Robert, can always count on you. Oh my God, this wheel is jam-packed today. Holy smokers. Look at this guy. That is for sure a record, isn't it, Michael Clark, for the amount that we have on the wheel? All right, here's our drum roll. I had my volume down on my speakers, so maybe you didn't hear it. So here's the drum roll again. Maybe. Nope, that's not the drum roll. Here we go. All right, there we go, guys. The wheel is in action. Herbert, Harris, Mark, who's it going to be? Oh, Harris on a last second move. Harris, are you still with us? Remember, gotta be present. Gotta be present. And, oh, there's an alarm. Don't want that. Harris, are you around? Uh-oh. Harris. Oh, Bobby, just don't remind me about that. Oh, Harris. Whoops. I posted the wrong, hang on. Delete that. It's Prosper Swag at prospertrading.com. Harris, you get 5 more seconds, and then we're going back to the wheel. 5, 4, 3, 2, 1. Harris, you are out. Sorry, man. Sorry. Them's the rules. Back to the drum roll. Okay, here we go. Harris, you missed out. Who is this going to be today? Francisco or Elisa? Francisco is the winner. Francisco, are you still here? Gotta be here. And yes, those of you that ever want to go and re-listen, re-watch any of these, when you go to our YouTube page, the Market Minds YouTube page, they are all listed there. Francisco, bingo, bango, bongo, winner, winner, winner. Okay, Francisco, you have the email address to shoot us an email with your size, mailing address. Yes, hopefully. Perfect. All right, guys. Thank you again. More than happy to share the presentation with you. It was posted in here a few times. And really, really appreciate you all being here. We will see you tomorrow, everybody. Or hopefully we'll get to see you later today, 3:30 Central, as I do a webinar today. Have a great one, everybody. Appreciate all of you.